The founding of the first savings bank in Hamburg, 1778. Picture yourselves in the bustling port city of Hamburg, nestled along the banks of the Elbe River in the late 18th century. It was an era of bustling trade where ships from distant lands docked in the harbor, bringing goods and wealth to this vibrant metropolis. The city teemed with merchants, craftsmen, and sailors, all drawn by the promise of opportunity and prosperity. Amidst the hustle and bustle of commerce, the need for financial services became increasingly apparent. Merchants sought a safe haven to deposit their earnings, while workers dreamed of building a nest egg for the future. It was against this backdrop of economic growth and social change that the idea of a savings bank took root. The year was 1778, and Hamburg was ripe for innovation. Inspired by similar institutions emerging in other European cities, a group of forward-thinking individuals came together to establish the world's first savings bank in Hamburg. Their vision was simple yet revolutionary: to provide a safe and accessible way for ordinary citizens to save and invest their hard-earned money. The founding of the savings bank marked a turning point in the history of banking, ushering in an era of financial inclusion and empowerment for the masses. No longer were banking services the exclusive domain of the wealthy elite. Now, even the humblest worker could participate in the growing economy and secure a brighter future for themselves and their families. The founding of the first savings bank in Hamburg in 1778 brought about both positive and negative consequences, reshaping the landscape of financial services and community welfare. Perhaps the most significant positive outcome was the newfound access to banking services for a broader segment of society. The establishment of the savings bank provided an avenue for individuals from all walks of life, including the working class and small merchants, to securely deposit their savings and earn interest, fostering financial inclusion and stability. By offering interest on deposits and providing a safe place to store money, the savings bank incentivized a culture of thrift and savings among the populace. This encouraged responsible financial behavior and helped individuals accumulate capital for future investments, education, or emergencies. The savings bank played a pivotal role in fostering community development and investment. By pooling deposits from local residents, the bank could provide loans for local businesses, infrastructure projects, and housing initiatives, stimulating economic growth and improving living standards in Hamburg and its surrounding areas. During periods of economic uncertainty or crisis, the savings bank served as a stabilizing force, providing a safe haven for deposits and liquidity for borrowers. This helps mitigate the impact of financial shocks on individuals and communities, bolstering resilience and confidence in the banking system. Despite its pioneering role in promoting financial inclusion, the savings bank may still have been inaccessible to some segments of society, particularly those living in rural or underserved areas. Limited branch networks, stringent eligibility criteria, or cultural barriers may have hindered certain individuals from fully benefiting from the services offered. Like any financial institution, the savings bank was susceptible to mismanagement, corruption, or economic downturns. Poor lending practices, inadequate risk management, or external shocks could potentially jeopardize the safety of deposits and undermine public trust in the bank's operations. The reliance on interest income to sustain operations and attract deposits could pose challenges during periods of low interest rates or economic stagnation. A decline in interest earnings may have limited the bank's ability to offer competitive rates to depositors or maintain profitability, potentially impacting its long-term viability. While the savings bank aimed to promote financial inclusion, it may have inadvertently reinforced social stratification within society. Wealthier individuals or established businesses with greater financial resources could leverage the bank's services to accumulate even more wealth, widening the gap between the affluent and the less privileged segments of society. The founding of the first savings bank in Hamburg in 1778 involved several notable individuals who played pivotal roles in shaping the institution and its impact on the community. Often regarded as the driving force behind the establishment of the first savings bank in Hamburg, Christian Adolf Overbeck was a respected merchant and philanthropist. Recognizing the need for accessible banking services for the working class, Overbeck championed the idea of a savings bank as a means to promote financial stability and social welfare. His vision and leadership were instrumental in rallying support from fellow merchants and civic leaders to turn the concept of the savings bank into a reality. Johann Heinrich Goslar was a prominent banker and member of the influential Goslar family, who played a crucial role in providing financial expertise and support for the founding of the savings bank. His extensive knowledge of banking practices and connections within Hamburg's financial circles helped navigate the regulatory and operational challenges involved in establishing the institution. Goslar's reputation for integrity and business acumen lent credibility to the venture, attracting depositors and investors to the fledgling savings bank. A renowned banker and financier, Johann Philipp Bethmann was instrumental in providing financial backing and strategic guidance for the establishment of the savings bank in Hamburg. Drawing on his experience in banking and investment, Bethmann helped structure the financial framework of the institution, ensuring its long-term sustainability and stability. His involvement lent credibility to the savings bank and instilled confidence among potential depositors and stakeholders. As a respected lawyer and advocate for social reform, Franz Reichelt played a crucial role in shaping the legal and regulatory framework for the savings bank in Hamburg. His expertise in financial law and governance helped shape the statutes and regulations governing the operations of the institution, ensuring transparency, accountability, and compliance with legal requirements. Reichelt's commitment to social justice and equality informed the principles upon which the savings bank was founded, emphasizing its role in promoting the welfare of the broader community. A prominent merchant and civic leader, Johann Heinrich Schroeder played a key role in mobilizing public support and resources for the founding of the savings bank in Hamburg. His advocacy for financial inclusion and social responsibility resonated with fellow merchants and citizens, galvanizing grassroots support for the initiative. Schroeder's dedication for serving the interests of the common people and promoting economic empowerment laid the groundwork for the savings bank to become a beacon of hope and opportunity for generations to come. The establishment of the first savings bank in Hamburg in 1778 marked a significant milestone in the evolution of banking and finance. This groundbreaking initiative laid the foundation for a new era of financial inclusion, community development, and social welfare. Over time, the concept of savings banks spread across the globe, empowering individuals from all walks of life to save, invest, and build a better future for themselves and their communities. The legacy of the first savings bank in Hamburg endures to this day, serving as a testament to the power of innovation, collaboration, and vision in shaping the course of history.